Hey, Bitcoin wealth builders, Simon Dixon here, and welcome to episode 94 of Bitcoin Hard Talk. It's Friday, and we're going to be going through everything that happened this week in Bitcoin, this week in macro, and this week in geopolitics. And the episode is going to have the overarching theme is the Fed dead? And the answer to that is sort of, and we're going to be going through everything you need to know in order to understand that from both the Bitcoin side and the macro side and the geopolitical side. So in part one, this week in Bitcoin, we're going to be covering more on what happened with formerly known as MicroStrategy, but strategy. Is it possible that it could trade at a discount to Bitcoin, and what are the implications on those that have Bitcoin in self-custody? We're going to be covering that and everything else that happened this week in Bitcoin, including the warnings from Syria and various other things from the central banksters as well. In part two, this week in macro, we're going to be covering whether the Fed is dead and how the US is taking Europe with it. And so if the Fed has vassalized the US, is the US going to be taking Europe with it? And who ultimately is in control? We're going to be covering all of that. And this week in macro, as well as the latest with the EU-US trade deal. Of course, we're not covering the headlines. We're going to be reading between the headlines and following the money. And in part three, we're going to be covering will Trump create peace after the meeting between Putin and the European leaders and everything that happened this week in geopolitics. So we're going to be jumping straight in. For those of you that are new to the show, my name is Simon Dixon. I spent over 2 decades of my life obsessing over the topics of investing, monetary reform, and 14 years in Bitcoin, having spoke at the first Bitcoin conference and wrote the first published book in the world to include Bitcoin. After leaving the Proof of Weapons network, where I had a career with the banksters. And so ever since leaving, I've been helping people prepare for a world of Bitcoin AI and central bank digital currencies. And we've been doing this ever since Bitcoin was $3. And right now, I believe we just passed 118,000.8 or something like that. So without further ado, let's go straight into part one this week in Bitcoin. Right. So as I said, the first thing we've had today is we had the overlords at the Federal Reserve, or the very last meeting that we'll be covering more in the macro section, Jerome Powell, who essentially works for the same people that Trump works for, which is the bank. So they both work for the same people, but one gets to call himself president, the other gets to call himself chairman of the Federal Reserve. And in response to what the overlord at the Federal Reserve, or the fake overlord to the banksters, said at the Federal Reserve meeting, his last meeting as chair was pretty dovish. And so we're going to be discussing more about that in the macro section. But as a result, after Bitcoin's correction from its ultimate high of approximately $123,000, it corrected down to about $112,000, which is a minor blip in the road if you've been following Bitcoin for a while. And upon the news, we had a little intraday surge. And I think we're around about $117 right now at the time of this recording. And that is based upon the dovish, which is the bullish side, comments around the debt-based Ponzi scheme deciding to repackage itself and roll over the debt in order to make as many people in the K-shaped economy further and further away. If you're close to the money printer, you do well. If you own fixed price assets, you do well. Everybody else gets wrecked and closer into debt enslavement. And hopefully those that watch Bitcoin Hard Talk are protecting themselves. But we covered last week all the different flip-flops. We had the Google flip-flop. We had the American Bitcoin Strategic Reserve flip-flop. We had the China flip-flop. And as predicted, I said that while you're getting one piece of news about China, you'll also get the flip-flop, because China and Bitcoin have been flip-flopping all along. And the latest news is that it was alleged that there was going to be not just a ban on Bitcoin exchanges and crypto exchanges and Bitcoin mining, despite the fact that over 20% of the hash power being mined in China, the allegation was that it was reiterating that ownership of Bitcoin and crypto is illegal. And I told you that it flipped and then flopped. And we had the announcement of a stable coin. And since then, this week, CMB International, which is a China company, essentially launched the first 24/7 Bitcoin and crypto trading since we were allegedly told that the exchanges are no longer allowed to operate there. So we now have exchanges, Bitcoin and crypto exchanges in China, when we're told that you're not allowed to have Bitcoin and crypto changes in China. Meanwhile, in the rest of the world, in South America, Central America, and in Latin America region, we had an announcement from Buenos Aires in Argentina, and they're going to be allowing citizens to pay their tax in Bitcoin and crypto. And as exciting as that is, please don't convert your Bitcoin to the shitcoin that you can use to pay your taxes in Argentina, because that is a really bad use of Bitcoin, but it is a step towards Bitcoin as legal tender. They don't care about freeing you and allowing you to own your Bitcoin in self-custody, but they're more than happy to allow you to get your Bitcoin and spend it on taxes while they convert it into the very same currency that they print, debase, and creates hyperinflation that Bitcoin protects you from. Maybe they'll actually end up keeping that Bitcoin eventually, but we'll see how long it takes them and how many people will actually pay their tax in Bitcoin. Interestingly, this was the announcement I got when I worked with the Isle of Man in 2014. When the government wanted to make Bitcoin legal tender, they started with accepting taxes in Bitcoin, got all the Bitcoin communities to come across to the island, until eventually the Bank of England said, if you support this Bitcoin thing, then we will be removing clearing to your island from the central banksters at the Bank of England. I digress. But anyway, in Buenos Aires, in Argentina, you can now buy your tax. You can buy your tax with Bitcoin. Bitcoin accepted here on the government's door. We had announcements from the Winklevoss twins, the amount of IPOs that are happening, where people are going public as Bitcoin or crypto companies on the stock market. There is a lot of activity. The banksters are cashing in, the investment banksters. They are securitizing, they are financializing, and they're trying to part you with your Bitcoin so that you own shares in their companies instead of owning Bitcoin itself. But the Winklevoss twins that were very early to Bitcoin, I remember they got Charlie Schwem, an early Bitcoiner that was part of the Bitcoin Foundation, and one of the early companies, BitInstant, that was allowing people to purchase Bitcoin by facilitating bank transfers to Mt. Gox, which was one of the very early exchanges that went bust in Japan. Well, they bought their first, I think it was 200,000 Bitcoin, working with Charlie Schwem and BitInstant. And I remember, if you've read the book Bitcoin Billionaires, and them sharing the story around how we had paper wallets at the time. There wasn't all these really easy ways to self-custody as there is today with these nice little devices that you can plug into your computer, and you can store your Bitcoin offline and you can secure it with a pin. You used to have to print it onto a piece of paper, get a paper wallet, and then you have to chop it up so that you don't have all of the private key backup codes in one place. And then they would go around all the different states in America and find a different bank to put like this backup of 20 different pieces of paper, and have the world's most sophisticated and probably secure paper wallet for these. I think it was either 100,000 or 200,000 Bitcoins at the time. And I'm sure they're never going to go to the problem of recouping those. But anyway, that was how you used to store on paper wallets. And later they created an exchange called Gemini, after essentially Mark Zuckerberg from the Proof of Weapons Network and Facebook, which creates a backdoor to the NSA to surveil all of our social data and build out what will likely be a social credit score. When he stole their innovation and sued, I think it was settled with Mark Zuckerberg for about $60 million. They went on to look at what their next challenge was, and their next challenge was discovering Bitcoin really early. And later they went on to create an exchange called Gemini. Well, the Winklevoss twins are going to be taking Gemini public on NASDAQ. So they said that they're going to be doing that. And really into the Trump administration, many of those really early companies that I invested in, we had like Coinbase, Robinhood, Exodus, Circle. They're all going public now, and I'm sure that Kraken's going to be going public soon. And so soon you'll be able to own shares in all these different exchanges, and they can go public as well. And Gemini is another one of those. There was also an announcement from Tether. Tether announced that they've appointed the former White House Crypto Council Executive Director. His name was Bo Hines. And Bo Hines is now a strategic investor for the digital assets in US strategy for Tether. So for those of you that don't know, Tether functions outside. It creates a digital dollar. It's the largest stablecoin. It was originally launched upon Bitcoin on a protocol called Omni, which was the first ICO for a protocol called Mastercoin way back in 2013, 2014. And they made a way for people to launch tokens on top of Bitcoin. It was slow and clunky. It was later called Omni. I think it was, then they had Counterparty and various other ones. But one of the early tokens that got traction was Tether. And Tether allowed people to send a digital dollar on top of Bitcoin Omni, where it was, for every token, it was backed by a dollar in a bank. And then that dollar in a bank was lent to the US government to purchase US treasuries, because you don't want to have billions of dollars in a bank account. It took ages to get to billions of dollars initially. It launched around about 2013, 2014. And it was trying to persuade other exchanges, like Kraken, I think, was the first one to accept it. Coinbase wouldn't do it. And it would essentially allow you to get your money off Bitfinex, hand it over to Kraken without having to go via the bank in the middle. Because normally when you take your money off an exchange, you then have to persuade the bank to receive it. You then have to persuade them to send it to another exchange, and all sorts of things can go wrong in the middle with these international transfers. Well, Tether made that digital dollar easy, seamless, and it allowed traders to arbitrage between the price differentials of Bitcoin on one exchange to another. Then Bitstamp started accepting it, another exchange in Europe that I invested in. And eventually you had this easy and seamless way of getting money around. And it was a small market cap. And it was until Binance actually launched as a crypto to crypto exchange, following Poloniex and Bittrex and other crypto to crypto exchanges. But then it started to get such traction, and it didn't have a bank account, that Tether then had was essentially the bank account for Binance. And Binance started doing more and more volume. It went up. CZ, the founder, he left OKX, which was one of the largest exchanges in China, launched the exchange after leaving OKX at a meeting in Chengdu. That was when many of the Bitcoin conferences I used to attend were in China at the time. And he left, launched Binance, and then suddenly the bank account that Tether was using shut down. It was a Taiwanese bank account. And at one stage, they were trying to get all of the money in a hole because they were thinking about withdrawing cash because no bank would receive it. They eventually solved the banking issue, had a few more hurdles in between. But now they are the 18th largest lender to the US government, with approximately $165 billion of market capitalization. Based upon investing it in US government debt-based Ponzi scheme debt, they now receive enough Bitcoin. I think in the first quarter, they received about 8,000 Bitcoin over 2 quarters or something. But they're now more profitable than BlackRock and Citibank, not combined, but individually. So it shows that full reserve banking is more profitable than fractional reserve banking when you rethink it on blockchain-based assets and on top of Bitcoin. Later, it moved over to Ethereum and various other blockchains. But anyway, now it has appointed Bo Hines, who was working for the crypto czar David Saxs, who was appointed by the Trump administration in order to push forward the AI and Bitcoin and crypto strategy. Now, but the David Saxs was one of the original PayPal mafia with Peter Thiel and Elon Musk, and obviously you had this technocratic appointments where Peter Thiel was building the surveillance state through Palantir. Elon Musk was consolidating all the Doge data, taking all of the social data on X, and building out what I think will eventually be a social credit score. With back-end surveillance systems going via Israel through their KYC systems, so that they can build out that surveillance state, combine it with Doge data. And what did Bo Hines and David Saxs do? Well, they didn't do a Bitcoin strategic reserve. In fact, it was announced that we're not sure whether America has 28,000 Bitcoin or 220,000 Bitcoin. The audit hasn't been done yet, but what they did do is they launched a stable coin. So now with stable coins, you can have the surveillance to artificial intelligence technology. You can have the social credit score. You can plug that together with stable coins, and America can back it by their national debt and push over and roll over the debt-based Ponzi scheme. Not save the country with Bitcoin, but roll over with stable coins. And that ties into our whole commentary that we're going to be doing in the macro section around whether the Fed is dead. But can you do a speculative attack on the Fed by Treasury issuing stable coins backed by debt? Well, we've had iterations of that in the past. We've had JFK launched a silver-backed currency issued by Treasury, which later he was assassinated. Abraham Lincoln launched and funded the Civil War by creating the greenback. It didn't have the technology at the time, but Treasury created debt-free money rather than borrowing it through the central bank. And he was also one of those people that had a bit of a battle with whether there should be a central bank or not. And obviously, he faced the same destiny. And the history of central banking is filled with stories like this, including all sorts of interesting stories. If you've read books like The History of Central Banking and the Enslavement of Mankind. And I've covered a lot of this on the blog. Anyway, well, we now know that the US strategy around Tether is probably to embrace. And in case it's going to get confrontational, you hire people that used to work for the White House. You come along, you work for the government for a little bit. You then go and work in the private sector, get paid a lot more. And you can use crony capitalism in order to work with plants like Howard Lutnick that founded Cantor Fitzgerald, that is also custodying much of the treasuries. And so you get this pay-to-play bribe type of environment that you see that is surrounding the dollar and the proof of weapons network. Well, anyway, we don't have a US Bitcoin strategy yet, other than you could hold it in self-custody. And so I suggest you hold it in self-custody because in the past, during the Great Depression of the 1930s, you had a scenario where your gold was seized, and that still hasn't been audited today. And even the gold that is now worth $3,400 is still priced at $42 on the Treasury's balance sheet. Well, anyway, the US Bitcoin strategy is becoming clearer and clearer and clearer, and it doesn't look like a Bitcoin strategic reserve. We shall see. There was a flip-flop. It doesn't look like that's the plan, but it does look like stablecoins, surveillance state, and rolling over the debt-based Ponzi scheme through the fiscal dominance that may end up ending the Fed and turn America into modern monetary theory. We'll be covering more about that in the macro section. But stablecoins seem to be more increasingly likely to be in the mix. This is kind of like, if you look at the Genius Act, there was an allowance for banks to use their reserves at the Fed and collateralize it into a stablecoin. So is there a need for the Fed when you've actually got a stablecoin backed by treasuries? Do they really need to be at the Fed's balance sheet? Well, that's another cornerstone of the Federal Reserve System being chipped away at. Speaking of central banks, the Central Bank of Syria, a complete victim of the proof of weapons network that suffered after the Arab Spring, infiltration, covert wars, colored revolutions, in order to have American interference via their proxy Israel that funded ISIS as they were creating an infiltration. And then you had Russian forces, Iranian forces, and created this ginormous, incredibly complex proxy war that now has had, you know, a Jelani, an ex-ISIS person, rebranded and put on a suit, representing the GCC, the Gulf Cooperation Council, and Turkey interest, while Iran has stepped back and Israel is occupying a massive chunk of that land right now. While it was in all of this uncertainty and all of this fragility, there is a massive territorial battle to colonize through currency. And there was talk about dollarizing, which means you become a puppet for the Federal Reserve. And that was pushed back with local currency. And obviously, it's looking like the GCC, the Gulf countries, are going to be in charge, with Israel occupying a part. And I believe if you watch the geopolitical section, we're moving into the vassalization of Israel into BlackRock and the GCC as this proxy war continues. But the central bank of Syria issued a warning today, and that was essentially saying, or it was earlier this week, that they're warning their citizens against trading or investing in digital currencies such as Bitcoin or others. Now, one of the really interesting things, when the Palestinian cause and the genocide with Israel was coming through, they wanted to cut off everybody from their money as part of the starvation and famine campaign that has now been recognized by the United Nations as an official, the first famine campaign. We'll cover more about that in the geopolitical section. But what they did is because Binance and CZ, basically the Department of Justice in the US took down Binance, CZ negotiated where he was only going to be in prison for 4 months. Later, this, basically CZ kept his shares. He was involved in now getting a deal with the Abu Dhabi investment fund to launch the exchange over from the UAE and Dubai. But part of it during this conflict, Israel wrote to Binance, and as part of the negotiation, the US installed their own compliance team. And so US took over the compliance side because they wanted access to the 270 million data points of all the customers at Binance. This is why you store yours in self-custody. And as part of a weapon of war and starvation, they actually seized and told Binance, you can't accept any withdrawals from anyone from Palestine. And then they started to expand that to Turkey, Syria, Lebanon, and various other regions, all because they didn't own it in self-custody. They even started to bomb the banks in Lebanon because they had a gold-backed financial system that gave people freedom from the central bank of Lebanon, which is a US implant, in order to install a debt-based Ponzi scheme. And that's why they lost all their savings. Well, of course, they don't want that to happen in Syria. They don't want the Syrian people to genuinely be liberated and free. And if that central bank does not find an independent strategy of issuing its own currency, it could be a stable coin, it could be backed by Bitcoin, it could be all sorts of things that they could do with that. It's such a waste of a tragic 14-year civil war that essentially is leading to the vassalization of the next leadership structure based upon the negotiations that come out of this new era within the Middle East. But they stated that Bitcoin and crypto within Syria, quote, they are illegal and not subject to any oversight or protection by the country's financial authorities. So Syrians, they care about you so much, they won't allow you, because they're not authorized by the authority, to own your own Bitcoin, so you can beat the shit out of whatever currency they launch next, and you can free yourself and liberate yourself from the central bank. They need to protect yourself from your own freedom, and they need to be regulated by the authorities to do that. So sadly, the Syrian central bank does not want the Syrians to be liberated, which was the point of central banking in the first place. It was to enslave people through a debt-based Ponzi scheme and fund wars in order to vassalize countries, engage in colonial expeditions, and steal resources, just like America did in Syria right now, where they paid the Kurd proxy in order to guard the oil, created a slush fund for their covert operations, where they could fund ISIS training camps in order to have infiltrations and create these civil wars all around the world that the proof of weapons network does through covert means through deceit and deception. So when Syria is ready to liberate itself from the colonizers, Bitcoin will be there, and the central bank can actually genuinely be created based upon nationalist principles when it is ready. I don't think it is ready yet because, sadly, after 14 years of engineered civil war, it is still being vassalized, and so the central bank needs to protect you from Bitcoin. Now, the other story that I wanted to cover is, of course, the PSYOP in the US in order to part you from your Bitcoin. And of course, they want to get you to own it through shares rather than in self-custody. And so there was a lot of controversy around strategy. Now, look, this is a very emotional subject because they have created, very quickly, round about 2020, 21, 22, can't quite remember the timeline offhand. But suddenly out of nowhere, this Bitcoin god called Michael Saylor came along, and he came up very quickly through the ranks, just like SBF did. And I'm not trying to compare the two because I don't think strategy is doing anything like what SBF was there to do. He was a covert operation for Operation Choke Point 2.0, in my opinion, in order to destabilize the region and allow BlackRock to take over big chunks of the industry based upon a operation with both the SEC and the Federal Reserve, the Gary Genslers and of this world, and the Jerome Powells. Where was it? Okay, yeah. So he came out of nowhere. Again, I'm not making a comparison. I'm not saying he's a scammer, but anybody that is involved in a public company means that you end up with normally about less than 10% of your company and 90% owned by Wall Street and institutional investors and a bunch of retail investors. So if you are in that situation, you are owned by it's the classic vassalization strategy, which is when someone creates a company, you get them to sell equity through Silicon Valley. You then have to bow down to the Silicon Valley agenda of how they think you should run your business in support with whatever you think the strategy is. And if you go public, you end up with more and more shares and majority control by institutional investors. So now you are in the hands of BlackRock, State Street, and Vanguard as your main institutional investors, subject to public reporting requirements, various other constructs. And then if you start using the debt capital markets, you're then subservient to your debtors in front of your equity holders. And so strategy essentially launched a speculative attack on the debt capital markets, the equity capital markets, use this in order to raise as much money, transform their company into a software company, into a Bitcoin treasury company. Now we have over 100 Bitcoin treasury companies, Strategy being the largest. They are approaching 650,000 Bitcoin. They used to be called MicroStrategy, now called Strategy. As I said, when you are in the hands of Wall Street, you're in the hands of Wall Street. And so if the government ever wants those coins as nationalization strategies, they may replace it with a stable coin if they want that Bitcoin. But as America is vassalized, I doubt the government will ever do that. And so this might be a private strategy for accumulating and getting as much Bitcoin in one honeypot. And when all of these other Bitcoin Bitcoin treasury companies, if any of those go into bankruptcy, you can dollarize the claim, keep the upside of Bitcoin, acquire the companies. And I'm sure Wall Street has figured out to do exactly what they did during the 2021 pump and dump cycle with public companies. And again, I'm not saying that, this is what happens as the whole complex builds up. And I've been covering this for a while. And so, no judgment on the person, but when Wall Street wants you, they get you. If they need you to be an asset of theirs, then they can do that either through financialization and securitization. And if they go to the next stage, they can do it through blackmail, whatever. And so this isn't a judgment of character. This is the reality of what Wall Street, Silicon Valley, and the proof of weapons network do. And so as it is now entering into the S&P 500 as one of the, thanks to Bitcoin, the fastest growing company, it started to trade at a massive premium above the value of their Bitcoin. So say it had $20 billion of Bitcoin. At one point, it was over 3 times the value. So the company was valued at over $60 billion, for example. And so this is known as what's MNAV. So it's net, a multiple of net asset value. What is the asset? The asset is Bitcoin. And now, thanks to new accounting processes, is measured as revenue, and therefore you can measure it as yield as well. And then what does strategy do? As rather than just selling shares to buy Bitcoin, it then starts creating more products. And so it says, we're going to have a convertible note where we can attract institutional investors, we can leverage the conversion to equity, or we can have preference. And now we can have where they promise dividends. And now we can have perpetual preference. And so they've now got it where at any time they can raise up to certain limitations, any amount of debt, promising a dividend in order to buy Bitcoin. And so the cap table, the construct of what happens in bankruptcy is getting more and more complicated. Now, there's nothing alarming at this stage, but when it is combined with the whole complex that is being set up, and maybe eventually it starts allowing for different types of banking services or borrowing against your Bitcoin, it is setting up all of these different things. The MNAV and the ability to pay Bitcoin yield may start drying up. And so now what we've seen is it's been correcting closer to a smaller premium above Bitcoin, but it also has to promise dividends. And so those dividends are obviously paid in fiat currency. They're offering 10%, 9%, 8%, 7% on different types of products. And so how do you pay them? Well, one way is to raise finance in order to pay them. Another way is to sell Bitcoin in order to pay them. Another way is to make enough money through the software company to pay them. But the reality is that now they need to be paid. And when you have a dollar liability with a Bitcoin asset and you made a promise that you're never going to sell the Bitcoin, then you're going to have to find another way. So if the software company is not producing enough money and you can't sell your Bitcoin, then all you can do is raise more to pay more, which starts to look very much like the dollar debt-based Ponzi scheme, but to a very lesser extent. If you're raising money through one product in order to pay off dividends in another product, it's getting closer and closer to sketchy. It's nowhere near like that right now, but this is a slow process and slow build-up. And I've been warning everyone, just stick to Bitcoin. If you want to play around with this, make sure it's only a small percentage of your Bitcoin and you know what you're doing and you understand it. But what happens if the MNAV goes below 1? i.e., what if the price, the market capitalization of all the shares are below the value of all of the Bitcoin? Well, that could happen. And this is effectively the premium in the market that is willing to pay in order to gain exposure to Bitcoin via this vehicle called strategy. So if it trades below, you're willing to pay a premium because you could buy Bitcoin or you could buy the Bitcoin ETF. What will it do in order to stabilize that price? Now, this is a very different product to GBTC, which was the trust created by Digital Currency Group and Barry Silbert. But this was the problem. It traded at a discount and a premium. It created an arbitrage, and that arbitrage was then taken advantage of by hedge funds. And those hedge funds were trying to arbitrage the price differential. And then those hedge funds were borrowing in order to arbitrage the price differential. And then you get all of these loans, and that was paying yield for others, and then you had this whole complex being built. Wall Street will do exactly the same. This is all being built, and this deregulation environment that the Trump administration is creating all of the products, all of the stable coins, all borrow against your Bitcoin, everything but Bitcoin strategic reserves in order to get you to put your Bitcoin with them. And so currently there is an MNAV of about 1.58x. This essentially means that the market is paying 58% premium for their Bitcoin. So they could buy the Bitcoin, but they're willing to pay 58% more to have strategy shares, because strategy has this ability to raise finance, to buy more Bitcoin and everything that comes with it, and whatever the revenue is worth on their operating business. But what is now 1.58 with a 58% premium was, while Bitcoin was going up, it was once 3.4x MNAV. And so the premium is basically decreased to 1.58. So as Bitcoin was going up, if you bought the shares when it was 3 point whatever, that is, you're losing relative strength to Bitcoin. Now, obviously, where it was outperforming before, it's now underperforming right now. And then there was a little bit of a panic, and people were questioning what this actually means. And so for investors, they're basically now paying $1.58 for every Bitcoin acquired. And Saylor basically sparked a controversy during the last earnings calls because he was revealing that the strategy has revised for MSTR, MicroStrategy. The equity, which he calls an ATM, and the equity ATM, where you're able to borrow money in order to buy Bitcoin, they wanted more flexibility. And so the flexibility in executing its basically capital market strategy is a change from what the original investors were investing in. So there was a promise never to sell the Bitcoin, but there was also some people that were saying, well, if you can't make it through software sales and you can't sell your Bitcoin, then you're going to have to issue more shares and you're going to have to dilute more shares. And this was a breach of promise to some people in their interpretation of how this was presenting themselves. And so by allowing the company to issue more shares, that's what they mean by flexibility. And so you've got, just like Bitcoin has a fixed money supply, strategy could issue more shares. And this is the fundamental difference between owning shares and owning Bitcoin. With Bitcoin, there is a fixed money supply enforced by maths and code, and the largest distributed supercomputer with nodes backing up all of the transactions and the history. But with MicroStrategy, a company, you can just be diluted. And so if you're a shareholder, if you're shareholder value and you increase, you're increasing the financial risk tied to Bitcoin as a result of this. And they've got products that depend upon volatility. And now it's getting increasingly more complex. So this led to a lot of unsophisticated investors or sophisticated investors that were upset that this was a violation of the strategy. So if you look at strategy right now, it basically owes $8.2 billion of debt. So that may sound a lot, but it's got $73 billion worth of Bitcoin. The price has gone up a bit since I looked at the prices. And it's got a market cap of approximately $95 billion. And so the removal of basically the 2.5x MNAV is a safeguard for equity issuance, which may allow MicroStrategy to sell more shares at a lower valuation. But it's a complicated thing for people to get their head around. And is it a violation of the promise? And what happens if it goes below that? Well, they may say that we need to sell shares. And what was the CFO doing? Bad timing. I'm not sure. Maybe he just decided that he's got another 160,000 shares left. But he sold $20 million worth of shares. Now, whether that's because he wanted to purchase something or whether that's because he thought the timing would be right, but this all coincided with a correction in the price, the MNAV going down, what looked like a violation of strategy, and then the CFO selling their shares. And that created a lot of controversy this week. And so what is the consequence of this MNAV premium collapsing for the stock? And that is the question. And that is what people are speculating about. And it is a question that if you want to engage in answering it, fine. But this is the difference between stocks and Bitcoin. So when the MNAV is high, the flywheel basically spins beautifully. They can raise more and they can buy more Bitcoin. But a high premium allows the company to issue stock at basically a low cost. And then they can quickly acquire more Bitcoin. But you're relying upon human risk. And we're kind of creating what looks like a bit of is fairly transparent, but a black box. But then at the same time, they're not willing to do proof of reserves and publish their wallet addresses. So now you got a lot of trust me, bro, auditability. The audit doesn't come out till a little bit later when it can be tracked in real time. And well, that's good. But when the price drops, which it could drop, because I imagine Wall Street will want to create a pump and dump cycle in order to margin call everyone borrowing against their Bitcoin and do the regulated version of what Celsius did. That then works inversely in reverse as well. Now, it is not risky at this stage, as I said, but you got to keep an eye on this if you are. And I just wanted to do a bit of a deep dive to just help people understand the difference as well. So if Bitcoin drops, then the MNAV starts to collapse potentially at the same time. Then you've got leverage starts to work against you, MicroStrategy. And then that could be combined with other operations, with other treasury companies, in order to basically send the other companies into bankruptcy so they can purchase on the cheap, consolidate more Bitcoin. This is the strategy. The end strategy is what? You don't own as much Bitcoin in self-custody. Across the ETFs and the treasury companies, there's now approximately 17% of the Bitcoin supply held this way. They want that to get up. We resist by not owning it. But even then, you look at who is strategy. Well, have a look at their shareholders. You got one of them is the Norwegian Sovereign Wealth Fund. But as usual, BlackRock holds approximately 5% of strategy. They have an ETF that gives exposure to Bitcoin, different companies. Vanguard, the private company, owns 8% as well. And so you can watch the Bitcoin leverage complex emerge and build. And I'm sure it will be done around the usual strategies that the asset managers use, where you have Wall Street, the investment banks securitizing and financializing. Trump has given the regulations for banks and the retail banks to put Bitcoin on their balance sheet. Then you'll have stable coins that will be connected to treasuries. And then people will be borrowing against their Bitcoin and receiving their stable coins. And I'm sure there will be a pump and dump cycle in order to liquidate and look at, consolidating more Bitcoin. Now, if you are in self-custody, you don't need to worry. Everything is good. And so that's everything I wanted to cover on this week in Bitcoin. What I just wanted to do quickly before we move to part 2 this week in macro, where we're going to be covering exactly what's happening in Europe. And we're going to be showing and demonstrating what power the Fed is losing and answering the question, is the Fed dead? And then in part 3, we're going to be going through the Russia-Ukraine situation, tie this all together into following the money so that we can determine what will happen in the markets, what the markets are saying around the likelihood of peace, or what the markets are doing in reaction. What I wanted to do is I played this video before if you're a long-term watcher of Bitcoin Hard Talk, but I wanted to draw your attention to a blog that I created on my blog, simondixon.com. And it's a completely free guide to self-custody. We've got a video that gives you an overview. And if you read the blog, it gives you a link where you can sign up to a completely free 8-module course that I asked a Bitcoiner that focuses on security and self-custody, the author of Mastering Bitcoin, Andreas Antonopoulos. I asked him to create a course for people who want to learn how to self-custody, where you learn how to back up and how to do it. I want as many people to be taking advantage of Bitcoin and self-custody. So we kind of open sourced it, put it in the Bitcoin Hard Talk membership portal. It's completely free. It's my gift to you. And the only thing we ask in return is that you create a login, and then I'll send you a newsletter each week around everything that you need to know in transitioning to this world of Bitcoin, AI, and central bank digital currencies. So I'm just going to play the video that gives you a flavor, an artificial intelligence video that took some of the videos and gave a little bit of a summary. It's about 7 minutes long. And then I'm going to grab some water. I'll show you the blog post where you can sign up to the Bitcoin Hard Talk membership portal. And I'll be right back of Is the Fed Dead for part 2 this week in macro. So Azad, if you could play the video right now. Thank you.